Welcome to the Economist in Your Ear podcast. So here's a question for you. When a $1 trillion sovereign wealth fund starts buying up some of the biggest names in gaming, think EA, think Tomb Raider does all that money, I mean billions, instantly buy you global cultural power. Or is it maybe just a massive, incredibly high-stakes financial gamble?
That's exactly the core issue we need to unpack today. The recent $55 billion buyout of Electronic Arts, EA, that was a huge moment, a real landmark. Right. And it wasn't just in any buyer. It was a consortium led by Saudi Arabia's Public Investment Fund, the PIF. This deal, well, it really cemented the kingdom's place as a, let's say, top-tier financial force in gaming, an industry that, believe it or not, now makes more money globally than movies and music combined.
Absolutely. And I think we need to look past that staggering price tag. We have to really examine the strategy underneath it all, the potential friction points, and what superpower even means in this industry. Are they buying genuine influence or just, very expensive assets with a lot of risk attached?
Well, the conversation really has to begin with the scale. I mean, the sheer size of it. We're talking about the largest leveraged buyout, essentially, that the gaming world has ever seen, that $55 billion for EA.
And what did that buy them? Some serious household names.
Oh, absolutely. The crown jewels, you could say,
Yeah.
of American sports gaming. You've got Madden, The Sims, and the unbelievably popular FC franchise, which everyone used to know as FIFA.
And it's interesting, it wasn't just the PIF footing the bill, was it? They led the group, sure, but they brought in some major American finance players, too. Silver Lake, which is huge in private equity.
A giant, yeah.
And Jared Kushner's Affinity Partners. Now, that last one, Affinity, that seems like a pretty calculated move, doesn't it? Maybe to help navigate the regulatory hurdles, especially that U.S. National Security Review, CFI-US.
It does suggest a certain strategic thinking about the approval process, yeah. But what's really fascinating is that EA, as enormous as it is, seems to be just the flagship.
Yeah.
The anchor acquisition.
Not the whole fleet.
Exactly. The PIF has set up this dedicated gaming arm, Saudi Games Group, and given it this war chest of, $38 billion? That's not just dabbling. That sounds like industrial policy. Like they're trying to build an entire gaming ecosystem, basically from the ground up.
And Safi was already making significant moves before the EA deal landed. They seem pretty smart, especially about mobile gaming, which, let's be honest, a lot of hardcore console gamers tend to dismiss.
They really did. Their timing in mobile looks brilliant in hindsight.
Yeah.
Back in 2023, they picked up Scopely, a mobile developer, for $4.9 billion.
Okay.
And that studio makes Monopoly Go. You've probably seen it. That game has apparently generated over $5 billion in revenue since then.
$5 billion. Wow, that's an incredibly fast return on investment.
It's staggering.
Yeah.
And it shows they're not just buying big brands. They can spot, real operational success and capitalize on it.
And it's not just these full takeovers. They've been strategically acquiring smaller states, too, kind of planting flags all over the place.
They really have. They took a big stake and a board seat in Embracer Group. That gets them a connection to IP, like Tomb Raider. And if you look at the PIF's total gaming investments before the EA deal, they'd already quietly built up almost $12 billion in minority stakes.
$12 billion before EA?
Yeah, often putting them the top 3 shareholders for massive Japanese and Korean companies. We're talking Nintendo, Capcom, Street Fighter, Koei Tecmo, Nexon. It's a really global spread, hedging their bets perhaps, but also building influence.
Okay, so the financial power is just undeniable. Let's pivot to the strategy then. How do they plan to turn all this financial clout into cultural influence? Soft power. Some people are calling it pixel diplomacy. The Savvy CEO, Brian Ward, apparently said he wants to build a company like Disney, but for games and esports.
Right, and that Disney comparison, I think that's really revealing. It points to their 2 main strategies. Disney has theme parks and intellectual property, right? Saudi seems focused on live events, esports primarily, and content creation.
Okay, let's break that down. Esports first.
So they bought ESL and Faceit, 2 huge tournament organizers, for about $1.5 billion combined. That single move reportedly gave them control over something like 40% of the global esports market, almost instantly.
40%, just like that.
Pretty much.
Yeah.
And they're using that control to really push Riyadh as the new global hub for competitive gaming. The Esports World Cup they're hosting there, that's the centerpiece.
I've seen the headlines. Huge prize pools.
Massive. Up to $70 million, they claim. And they're reporting figures like 750 million online streams globally. Whether you take those numbers at face value or not, it's undeniably a huge spectacle designed to draw the world's gaming attention straight to the kingdom.
So that's the big, flashy events side, the fandom engine, as you call it.
It's a magnet for tourism, for business deals. But the other side, the soft power side, is maybe more subtle. It's creeping into the actual game content.
Okay, this is where it gets really interesting, I think. Give us some specific examples. How is this influence actually showing up inside the games people play?
Well, take Ubisoft, a major global publisher. They announced recently that some new Assassin's Creed content will be set in Al-Ula.
Al-Ula. That's the historic site in Saudi Arabia the government's heavily promoting, right?
Exactly, promoting it as this major cultural and tourist destination. So here you have it embedded directly into the lore of a massive global gaming franchise. It's like perfect co-marketing, and it doesn't require any heavy-handed censorship. It's just there, part of the game world.
Making the location itself culturally relevant through the game. Clever.
It is. And then there's another example, maybe a bit more playful, but it shows the network. Cristiano Ronaldo, the football star.
Who plays for Al Nassr FC?
Which is owned by the PIF, yes.
Oh.
He recently appeared as a playable character in SNK's classic fighting game, Fatal Fury.
Okay. Why is that significant?
Because SNK, the game developer, is majority owned by a Saudi foundation called Mizakay, which has links back to the PIF sphere. So you see the connections. Sports assets, financial groups, game companies, they're all becoming interconnected.
Okay. So we've got the money. They own massive IP like EA's, and we're seeing these content nudges already appearing. It seems like a straightforward path from buying assets to gaining cultural influence, but you're suggesting there are some big assumptions baked into that narrative that might not hold up. Let's tackle the first one, the big fear. Censorship and content control.
Yeah, people jump straight to that Hollywood tailoring content for China comparison. The worry is that Saudi ownership will mean games get sanitized, sensitive topics get removed, maybe certain viewpoints get pushed.
And that's not an unreasonable fear, is it, if you own the company?
The potential is there, technically. But I think the risk of overt, clumsy censorship across the board on global releases is actually pretty low.
Why low? They have the power.
Well, two big reasons. First, these huge games depend heavily on Western development, talent designers, writers, programmers. These are people who often have strong views, and trying to impose heavy-handed changes could lead to serious internal backlash, talent walking away.
Okay, the talent drain risk.
Exactly. And second, the global gaming audience is incredibly online, very vocal, and quick to react. If players perceive that a beloved franchise is being manipulated for political reasons, the PR fallout could be catastrophic. It could actually damage the soft power goal more than help it.
So if it's not direct censorship, what you call negative censorship, what form does the influence take? You mentioned soft polls earlier.
Right. It's the difference between saying you cannot publish this story versus saying, hey, if you create this optional DLC pack set in Aula, we'll help fund it, market it, make it really easy and profitable for you. Games are so modular now.
Ah, so regional variants or optional add-ons.
Precisely. You can ship something specific for one market or as an extra purchase without changing the core global narrative that goes out to North America or Europe. So the influence is more likely to be about co-marketing deals, maybe funding events within games tied to Saudi locations, incentivizing certain settings, less about deleting things.
That makes sense. A much lighter touch. Okay, let's move to the second assumption. That buying EA, owning all that IP, automatically means you control the market. Does financial power equal market dominance here?
It gives you dominance over supply, definitely. They control the creation and publishing of some massive games now. But it doesn't mean they control distribution.
Explain that difference. Owning the engine versus owning the road.
Kind of, yeah. Think about who actually controls how players access and buy games today. It's the platform holders. Steam on PC, Sony with PlayStation, Microsoft with Xbox, and maybe most importantly for revenue, Apple's App Store and Google Play on mobile.
Right, the platform gatekeepers.
Exactly. Saudi Arabia has bought a huge source of valuable content, but they don't own the gates to the consumer. Those platform owners can still charge their standard 30% cut, which is enormous. They can change rules about how games make money, like loot boxes or microtransactions. They can change rules about data privacy.
So policy shifts by Apple or Sony could hit EA's bottom line harder than anything the new owners do internally.
Potentially, yes. It makes that massive $55 billion investment much more dependent on factors outside their direct control. Their success isn't just about owning Madden. It relies on third parties like Apple continuing to allow them favorable access to players.
Which means the real test isn't just the brand names. It's whether EA, under this new ownership, can actually perform better financially.
Absolutely. To make the math work on a private equity-style buyout like this, especially with partners like Silver Lake involved, they need EA to significantly grow its user engagement and spending. It comes down to what the industry calls live ops excellence.
Live ops, meaning?
Keeping players engaged day after day, month after month, in existing games like FC or The Sims, constantly improving things like daily active users or DAUs and average revenue per user, ARPU. That kind of operational skill that's built over years through culture and constant tweaking, it's really hard to just buy it instantly at a premium price. If EA's core metrics don't significantly improve by, say, 2028, that $55 billion price tag starts to look very, very heavy.
Okay, a crucial point. And the third assumption we need to challenge. Let's go back to that Disney theme park idea for esports. Those huge streaming numbers for the World Cup, 750 million claimed views. Doesn't that translate into a profitable business? Surely that's generating real money.
It generates fantastic visibility, massive exposure. But the actual economics of running esports leagues and tournaments, they're notoriously difficult. Often they lose money.
Really? Even with those kinds of viewer numbers?
Yes, sponsorships can be unreliable, tied to economic cycles. And the costs of putting on these huge, high production value events, flying in teams, offering massive prize pools, they are incredibly high. Many esports organizations struggle to break even, let alone turn a consistent profit.
So the Esports World Cup, despite the hype, is maybe more like a giant, very expensive advertisement for Riyadh and the Kingdom, the loss leader.
That's probably the best way to look at it right now. Think of it as a marketing KPI, key performance indicator. It measures reach, influence, brand awareness for Saudi Arabia Inc., if you like. It's like hosting the Olympics or a World Expo. The goal isn't necessarily direct profit from the event itself. It's about attracting tourism, international business deals, tech partnerships, using esports as the magnet.
Okay, that reframes the esports strategy significantly. Now let's look inward at the domestic goals in Saudi Arabia itself. This is all tied into their Vision 2030 plan, isn't it? Diversifying away from oil, creating jobs.
Very directly. They have ambitious targets, something like 39,000 jobs in the gaming sector, over 250 gaming companies established locally, all by 2030. And they often highlight an interesting statistic. Apparently, 48% of gamers in Saudi Arabia are women. So there's a large, potentially untapped local market, too.
The ambition is clear, the money is definitely there, but what's the big hurdle to actually achieving that vision of a homegrown industry?
In a word, talent. Or more accurately, talent density. Making truly world-class AAA games, the kind that justify that EA price tag, needs a deep pool of experienced people. We're talking skilled engineers, artists, writers, producers, designers, and crucially, the experienced managers and studio cultures that know how to orchestrate these incredibly complex multi-year projects.
And you can pour money into building studios and infrastructure, but you can't just instantly create thousands of seasoned game developers with 10 years of experience.
Exactly. Money speeds things up, but it doesn't eliminate the time needed to cultivate that human capital. It's like trying to create Silicon Valley or a world-leading F1 team overnight. It doesn't work that way. So for the next few years, probably for most of this decade, they'll still be heavily reliant on the studios they've bought overseas, EA, Scopely, parts of Embracer, to produce the really big global hits.
So the real test of their domestic strategy won't be the spending or even the number of companies founded.
No. The real sign that they're succeeding domestically will be when we start seeing globally competitive games, maybe AA level to start, coming out of studios based primarily in Riyadh or other Saudi cities, maybe around 2028, 2030. That's when you'd know they're shifting from just owning financial assets to actually building genuine creative and technical capability at home.
Okay, so let's try and pull this all together. It seems clear Saudi Arabia is now, without doubt, a financial superpower in gaming. They have the money to move markets, buy huge companies, stage massive events. That part's done.
Agreed. The financial muscle is undeniable.
True. Lasting power in gaming, you argue, comes more from the players and the creators. It's about habit, time spent in games, making things people find consistently fun and engaging. And that cultural gravity, that's not something you can just guarantee with a checkbook.
That conversion from financial power to genuine cultural and operational power, that remains the big question mark, the central risk. The EA deal is this enormous high-profile experiment testing whether money and strategic patience can actually accelerate that process. But there are other major risks, too, beyond just content or market acceptance.
You mean the less glamorous stuff, like the financial engineering behind the deal itself?
Exactly. Let's call it return discipline. Remember, PIF partnered with Silver Lake, a classic private equity firm. PA firms need to show significant returns relatively quickly for their investors. So EA is now under immense pressure to perform financially better than it did before the buyout, just to justify that massive price. Even if PIF has a longer view, their partners probably don't. That creates a real performance imperative.
And you mentioned regulatory risks earlier, specifically CFI US in the US. Why is that particularly relevant for a games company like EA?
CFI US reviews foreign investments for national security risks. Now think about EA. It's a live service company. It holds vast amounts of data on millions of users, personal details, spending habits, online behavior, including millions of Americans playing Madden or The Sims daily.
Okay, I see where this is going. Data security.
Right. CFI US could impose conditions on the deal. They might say, for example, that all U.S. user data must be stored locally and walled off from the parent company. Or they might require certain operational decisions to be made by an independent U.S. board. Any conditions like that could seriously complicate or even undermine the strategic control and data synergy the PIF might have been hoping for.
So if you listening to this want to track whether this huge Saudi bet on gaming is actually paying off over the next few years, what should you be watching? You mentioned 4 key indicators.
Yeah, 4 things I keep an eye on. First, the basics.
Yeah.
EA's operational numbers after the deal are bookings, that's actual money coming in, and user engagement metrics growing sustainably. Not just spikes from new game launches, but steady growth.
Okay, number 1, EA's performance.
Second, watch the domestic development scene. Are we seeing any globally competitive games, maybe A quality, first actually get finished and shipped by studios based in Saudi Arabia? That's the proof of the talent pipeline maturing.
Number 2, homegrown hits. Got it.
Third, look at the esports economics. Does the revenue from the esports World Cup and related activities start to look more like a real business? Does it become recurring, less reliant on direct subsidy, or does it stay purely a marketing expense?
Number 3, esports profitability or lack thereof.
And fourth, keep an eye out for any news on regulatory conditions, particularly from CFI US regarding the EA deal. What restrictions, if any, are placed on data access or operations? Those 4 signals taken together should give you a pretty good sense of whether this massive financial investment is truly translating into the kind of lasting power they're aiming for.
Thanks for listening. Follow us for daily insights into world affairs, and don't forget to like, comment, and share.